Hello everyone and welcome to my weekly update with me, Richard Perry, market analyst at Handtech Markets. Each week I take you through the key events I believe will be driving your investments in the coming days. Now, moving into this week, we've had an interesting move on the dollar. Dollar seems to have started to tail off a bit. It was ever since that core inflation, core CPI data last week that just came in slightly underneath expectations, and that sort of started to give traders a bit of an excuse to take some profits. And we've certainly seen the likes of euro dollar pulling higher, and also it's affecting across markets whereby the gold price seems to be sort of kicking higher as well. Now the question is whether this turns out to be a bit of a near-term blip or whether it actually is the start of a move more to the downside on the dollar. What I think we're going to find this week is that retail sales for the States is key, because if the consumer in the States is still sort of actively sort of pushing forward and strong retail sales, that's going to help inflation, and that's going to sort of continue to push the strong trend of US data forward, and that will help to propel yields higher once again, you'd think, and also subsequently the dollar. But it certainly seems as though there has been an interesting shift in sentiment on the dollar. Now, as I said, I think yields could have a key driver in this. Yield differentials seem to be back in play as in terms of being a major mover of forex markets at the moment, and I think that is interesting. You've got the 10-year Treasury yield chart here that I'm showing you on the slide, and I think that is a key move. If you start to see the 10-year Treasury yield back above 3%, for example, I think that would certainly help to support the dollar once more and put this little near-term blip on the dollar into more context. So that's what we're looking out for this week. There's not a huge amount of major data. I think the Eurozone data will be interesting, however. I think on Monday morning we've had the comments from an ECB member, the French Governing Council member Villeroy, who basically suggested, along the lines of what Jens Weidmann of Germany has been suggesting for a while, that QE is going to stop this year, and also subsequently we're sort of looking out for mid-2019 as when we're going to start to see interest rate hikes. So it'll be interesting to see if the data starts to sort of back up that sort of move. And what we saw in the flash CPI, prelim CPI for the Eurozone, there was a big disappointment on the core CPI. Will that be revised higher, for example? If it is, then you could start to see euro getting a bit more traction once more. Also the GDP data as well. So there is actually quite a lot of data that we need to be looking out for on Tuesday from China, from the Eurozone, the UK in terms of wages growth, and also those US retail sales. So watch out for that. They will be driving sentiment certainly through the early part of the week. Now, in terms of forex markets, as I said on euro dollar, we've started to see euro dollar pulling higher, 3 sessions in a row up. Now, are we going to see that continuing? We've got €1.20 as a key level to watch out for near term. That will be a level that the market will be looking at on a psychological basis, but then obviously above that we've got the 120.90 level and the old key floor of the first few months of the year at 121.55. So if this euro continues to gain traction, we could see a nice little pop to the upside. Now, in terms of cable, there's not so much of a recovery in process. So at the moment it's a consolidation play, and that's been held back by a number of factors. Brexit is always going to be bubbling under, but also the UK data has been a key factor in driving that underperformance. Are we going to see wage growth continuing to improve in the UK? Real wages going up, that's what we want to see from a UK consumer basis, and that's what the Bank of England would that's what sort of would help to allow the Bank of England to push forward with potential rate hikes going through 2018. At the moment it seems unlikely that we're going to get a rate hike anytime soon, but certainly average wages going up in the UK would help that. That's on Tuesday. So dollar yen is another factor. Is dollar yen going to start to break its uptrend? Now we've seen the Bank of Japan is not intent in any way at the moment, certainly on sort of turning any more hawkish. It certainly seems to be still on that dovish track, and that has helped to sort of sustain that uptrend on dollar yen. Will that start to change? Unlikely to be driven by the yen side of things. I think that is still going to be a dollar factor there, and a subsequently yield differentials on the 10-year yields will be interesting to watch still. What we have got also is indices that are starting to sort of gain traction to the upside on Wall Street. That had a breakout last week, 26.75 to 27.17 on the S&P 500 is now a band of support. However, in European side of things, we've got the DAX and the FTSE, which are starting to arguably sort of lose a little bit of upside traction, certainly on the DAX. Is that due to the fact that the euro is starting to rally? That is a consideration to take hold. Also, if sterling starts to rally against the dollar, is that going to be something that starts to drive FTSE underperformance as well? These are all still factors that we have to be looking out for. On commodity prices, again, the dollar is a key play here. The gold price has been rallying as the dollar has been just tailing off in the last couple of days. Is that going to continue? We've got still a little bit of an underlying sort of geopolitical tensions issue with the trade dispute. I think that could help to sort of support gold in the medium term, but at the moment I think it's a dollar play, and I think how the dollar moves in the coming days could again be a key factor in how the gold price moves. So we need to watch out for that. Oil, again, US, Iran issues there, and they help to underpin the oil price. That's going forward. I think that's going to continue to sort of help to support oil above $70 on WTI, above $72 to 74.50 on Brent crude. Now, if we continue to see the US production gunning higher, which is what we saw on Friday, we could see a bit of a correction though near term, because we saw the Baker Hughes rig count rising. 844 was the highest since March 2015. Will that continue to rise? Will that accelerate higher? I think it certainly looks as though that US production has the potential to sort of put sort of take up for any slack that we get from the Iran issue and also Venezuela. But it'll be interesting to see how that plays out in the near term. So for economic indicators for the rest of the week, well, China, as I said, Tuesday's a big day, but also we're looking out for the CPI, the final Eurozone CPI on Wednesday. That is a key issue. Looking down my list here, US industrial production has the potential to have a bit of an impact, but generally speaking, it's Tuesday is our big day this week, so that's watch out for that. But aside from that, I wish you good luck in all your trading, and I will speak to you again soon. Thank you.